This episode of Talk Your Book is proudly brought to you by Honan, providing a complete range of insurance, risk, and financial solutions.
Fundies called me up, told me to take a look, but stay stubborn as bulls and talk their own book. Get the money, get the money, get the money.
Well, Alex Svetski, thanks very much for coming on Talk Your Book. You're our first crypto expert to take the plunge, so really appreciate you giving us some of your time.
Thank you, Mr. Judd. I feel like I've got some big shoes to fill here, man. This is going to be fun.
And I thought maybe you could start by talking a little bit about Amber App and how your involvement has come about with that.
Yeah, cool. So like really briefly, a couple of years ago, was running around telling everyone, oh, you should buy this thing called Bitcoin. And everyone was kind of looking at me like I had three heads. And, you know, the few people that I did manage to kind of show them the light back then, the biggest challenges were like, where do I go? How do I buy this thing? You know, what is it? And I don't know, what one friend was like, man, you're entrepreneurial, go build something. And I was like, yeah, okay, maybe I will. So I thought of this idea of, you know, can I just build an app which can help people dollar cost average into Bitcoin, you know, being this scarce asset, that this sort of reinvention of money, which we'll go into a little bit later. But yeah, Amber's just this app that you download. It just makes accumulating some Bitcoin really easy. It works like a savings account. You know, you give it like two variables, which is basically, you know, $5 a day, you know, every day, or whatever sort of variable you want to set. So an amount and a frequency, and it sort of like puts aside some money for you, but denominates it in Bitcoin. So it's like, it's a savings account that's not losing value. Surprise, surprise. Which is quite unique in today's world with strange rates and, you know, negative interest rates and God knows what else is going on. So yeah, that's basically the crux of the app. It's a Bitcoin accumulation app or a Bitcoin savings app.
And now it's an incredibly deep topic we're going to dive into today. And some of our viewers are generally more focused on stock investing. So by way of background, I thought maybe the best place to start as you go down the Bitcoin rabbit hole would be exploring money in and of itself in a fiat system and what money actually is.
For sure. So I think it's really interesting. When like I've been on loads of Bitcoin podcasts, and I was on one non-Bitcoin podcast like last year with Sean Puri, who was actually the co-founder of Bebo, if anyone remembers like Bebo before MySpace. And it was funny because I had to kind of frame it for his listeners at that time, because most people who've come from an investing background, they sort of view Bitcoin almost in the mental model of a company, and they're like, oh, you know, it's got no earnings and this and that, and they kind of write it off. But I implore anyone listening to this at the moment is to sort of remove the mental model of viewing this as a company or as a share, and think about it more like almost like the internet. It's like, you know, you can't buy shares in the internet. Like it's this open network, and trying to create a value framework for it is really, really difficult. So we kind of, that's, I guess, one helpful mental model. And then I'll kind of introduce this concept of money now, which I think is really, really important. For me, it's really rare to find anyone and talk to them and get them to, you know, define what money is. So maybe let's just make this interactive. So Chris, in your sort of, I guess, maybe tell me two things. If before you heard about Bitcoin and any of that sort of stuff, how would you have defined money in your head, like back in the day, say a couple of years ago?
I would have said it was something you could exchange in return for goods or services.
Okay, cool. And these days, has that sort of evolved a little bit, or?
I still think it's something you can exchange for goods and services, but I have a deeper appreciation for how that money is created.
Awesome. Okay. So what I kind of, you know, what you're defining there is like something that can be exchanged for goods and services. I kind of define that as one of the functions of money. So a lot of people, you know, generally that's probably the most common definition is, you know, something that I can exchange for other things, for goods and services. And that is, you know, correct fundamentally. But money, I like to think in a deeper sense, is this almost like a fabric that binds human beings together. And I'm going to get a little bit cosmic here, so bear with me. Is this, when you, me, and everyone else participate in society, we all perform different functions. You know, we have input into society. We all add different value. We extract different value. We all do different things, and we need a mechanism via which to measure that. So, you know, I've spoken to many people and they're like, oh, you know, the world would be better if we didn't have money. And I always kind of come back to, well, it's not really true, because human beings will always have to create a mechanism via which to exchange their respective input. So, you know, you play footy, I write articles and I rant on Twitter, you know, someone else makes shirts, someone else makes iPhones. Like, we all do these things which we all subjectively value differently. So we need a mechanism through which to, you know, trade these things. It's not like, you know, I can't go and, I don't know, write an app and then trade, you know, access to my app with a farmer for, you know, 18 apples. Like, that just doesn't work that way. That you can't create complexity in society. So we will always default to a mechanism through which we can trade and subjectively measure our inputs into society.
Without money, there'd be a lot of big angry guys getting a lot of jobs done for them because everyone was terrified of them. So as a lover, not a fighter, I'm very happy for money to be around.
Absolutely. Money is like literally the thing that allows us to cooperate. So I kind of call it the ultimate tool of human cooperation. And what it is at its very core is our labor or our work in like a crystallized form. So, you know, I go and perform something, you go and perform something. And then at some point in time, we can exchange the product of our labor at the respective valuation. So, you know, I might value a shirt more than Bob down the street, you know, so I'm willing to trade more of my labor, more of the value that I've input in society with that. So anyway, with that in mind, you know, it's really important then to understand is like money has been many different things over the centuries. Like, you know, in the beginning, a lot of people think we started off with barter, like, you know, trading apples for bananas, but that wasn't exactly true. The original money was, you know, promises. Like, you go and pick the berries, I'll go, you know, hunt the rabbit down, you clean the fucking cave. And, you know, we've got like, we can trade promises. And then we realized that, okay, to get out of the cave, we need to kind of record these promises somewhere. So we, you know, the first money was actually little writing on a ledger, like that's sort of what we did. And then we went to commodity money. So we started trading things like, you know, cattle or salt or things like that. But, and we kept sort of money kept progressing to better things, because money is this concept that we all converge upon to say, all right, what object best represents the product of my labor or my time? And we ended up over thousands of years converging on this yellow shiny rock we all know as gold, because it had some really, really good properties that were objectively better than other things. So like, you know, money needs to be durable. There's no point in holding all your money in salt, because if it rains tomorrow, there goes, you know, your life's work. You know, you don't want to hold your money in shells, because if you work all year inland and then you go retire on the beach, every bum there's got shells. So, you know, there's no scarcity. You want it to be divisible, because, you know, this is sort of one of the reasons why we had coinage and notes issued against gold, was because gold wasn't very divisible. As society grew, and you sort of got this fixed or this scarce element in gold, if you wanted to buy something small, you had to like shave gold dust off. So that kind of stuff didn't work. So you have all these things. Now gold really won, I would argue, for two primary reasons. One was its scarcity. Like, you couldn't just print gold. Like, if you remembers the alchemist's dream of trying to create, you know, something, trying to turn things into gold. So you couldn't do that, number one. But number two, it had a really unique property of gold is the only inert metal that we have. Like, it doesn't corrode. It doesn't, like, it stands the test of time. So it's perfectly durable. It's recognizable, and it's fungible. So gold is the same, whether you're in Australia, Peru, Germany, Asia, it doesn't matter. So it ended up, the market chose gold organically. And then we then had to build derivatives off gold to represent the gold, because it was, you know, a bit clunky from a divisibility and portability perspective. Where things went sour was, you know, these institutions that originally stored the gold and issued the certificate decided that, hey, no one's going to know how much gold we got in here. So let's just, you know, hand this guy 2 slips or 3 slips. And over time, you know, some institutions were trusted, some were not. You know, we've had all sorts of, you know, these institutions, and known as banks, right, is, you know, they went bust. You know, people realized that, hey, you know, these guys are issuing more paper than the actual money they hold. So we've sort of gone through multiple inflations and all this sort of stuff. And over time, obviously, governments have kind of co-opted the right to issue money. And originally in the early days, it was issued against the amount of gold they had. And then really kind of glossing over all the history, in 1971, something interesting happened was Nixon kind of pulled the US dollar, which was the most powerful money at the time, off the gold standard. And, since then, we've seen the appreciation of every asset class across the board, with the increase in the total money supply and the complete deviation away from the original essence of what money was, which is it's supposed to map back to your labor, and your labor is effectively your time and your energy. So we've kind of distorted the entire mechanism through which human beings can cooperate. Like now, you and I, we have to trade our time and energy for money, whereas there's a small subset in society called central banks and governments who can just create it out of thin air. And you start to get this real rift in society. And that is actually what I believe is at the core of all the inequality. And you've got asset price inflation, and it just messes up everything. So anyway, that's kind of like a overview without getting too deeper down this rabbit hole. But money is extremely important for society to function. You cannot have society it's what's the word? It's anachronistic to think that money cannot exist in a society. So it'll always exist. The question is, the more functional the money, the closer to its attributes that it has: divisibility, portability, scarcity, recognizability, fungibility. So those key attributes, the better it'll be able to perform the three functions of money, which is storing a value, exchanging, so medium of exchange, and a unit of account. Then you have something that can be used as money. And at the moment, we live in a world where we're losing the store of value function. Our money is inflated away. The medium of exchange function is under attack, because these days you basically have to beg permission to send money overseas and all this sort of stuff. And the unit of account thing, it's there, obviously, because we measure everything in money. So that sort of is by default still in existence. But money has lost complete meaning these days because it's just issued by someone's decree. And, we have this thing called Bitcoin that's come along that embodies all the original elements of what money should be. And it's proving to be the challenger to what is the biggest market in the world, which is money. So anyway, I'll kind of end that there. Hopefully haven't fried anyone's noodle in the process.
That's great. So, I mean, that gives us a helicopter view of money. And I'm sure everyone watching this would know of Bitcoin and have some idea in their own minds, at least, of what it is. But how would you articulate what actually Bitcoin is, apart from what purpose it can actually serve, just on a technical level? What is it?
Sure. So I guess in the beginning, I said money kind of started off as promises, and then the first writing or the first form of anything that we find in the earliest cave walls was people marking down a tally of stuff that people did. So money kind of started off as a ledger, and here we are full circle, and we've come back to this ledger, but now in a digital form that is immutable, that is run on hundreds of thousands of servers around the world, that somehow, irrespective of the fact that each server is run independently, reaches consensus every 10 minutes. That's the sort of the blockchain piece. And now we've actually got a global ledger that we know exactly how much money there is, what the transactions are. We know the rules of the game. We can opt in or we can opt out. It's completely voluntary. And the world is obviously finding value in this thing. The first, recorded Bitcoin transaction was, technically it was Marty Malmy who traded, I think, $5 for, I think it was 1,000 Bitcoin. But the one that most people know about is the pizza, Laszlo Hanyech, I think his name is. But yeah, so it was 2 pizzas for 10,000 Bitcoin. So it was valued at, 0.008 cents. So that today I think is what, 2.6 billion Australian dollars. So, it was this thing that nobody said this is what Bitcoin's valued at. It's almost I always tell people, when you think about how, Bitcoin's come to the valuation today, is imagine if you could go back 5,000 years and you found a piece of gold on the ground while everyone was still trading in shells and salt and things like that. And you went to buy a chicken and, you're like, I'll pay for it with this rock, thanks. And someone's like, the hell is that? You know, you're like, well, it's gold. And they're like, what can I do with it? And you're like, well, you can, you know, you can trade it. And they're like, well, I can't eat it. I can't drink it. I can't, you know, wear it. Piss off. So it's, there's like, in the beginning, it sounds crazy, but, you know, gold ended up emerging, not by someone's decree, but just through what I call economic Darwinism. You want to hold the product of your labor. You want to hold your wealth in something that is best representative of the, you know, these attributes of money. And that's what's happening with Bitcoin is more and more people, like what we're seeing with Bitcoin's price rise over time is the world converging on the best form of money. And we are still so early. Like it took gold 5,000 years practically to kind of emerge. And Bitcoin is sort of this better form of money, which has all the attributes of gold. It's, I mean, and even in better degree. So it's completely scarce. Like nobody can print any more of this. Like it's codified. This is how much there is. If I want to change that, I'm free to do that. But as soon as I change the rules, I actually create my own network. So I'm off. So it's kind of like I've created, you know, Bitcoin Alex's version. And then the question is, who's going to follow me? So it's like Bitcoin's ultimate security is in the fact that it's completely open and that anyone can copy it. And I kind of take my economic mass in my own direction.
So let's dig into that for a second, a little bit deeper.
Sure.
In that it's that length of the blockchain is that what gives it proof that this Bitcoin is what it says it is. Could you maybe walk through in layman's terms how it's unhackable due to the consensus reached by the various computers spread across all the world and working out which blockchains existed for longer?
Sure. So it's actually, so it's part of the length, but there's also how many nodes are running which set of rules. So if you can think of Bitcoin, the set of rules on Bitcoin almost as like the constitution. Yeah. And Bitcoin's got its constitution. It's got these sets of rules. So there's 21 million Bitcoin. A block is found every 10 minutes. You use a SHA-256, blah, blah, blah. So it's got these rules. Now, you can voluntarily choose to run those rules via a node or via a miner, and you can help validate the transactions on the network following those rules. Now, if you want to, you can go and create your own copy of Bitcoin with your own rules and say, look, I don't think 21 million is enough. I want 42 million. You can go and do that, but you then no longer sync up with the same network. You've actually created your own network. So Bitcoin's defense is in its openness, is now like, and this is sort of what fries people's noodles sometimes when they think about this, because it's not this central system. Hacking doesn't even come into the equation because there's nothing to hack. Yes. Bitcoin's code is completely open. It's open source. It doesn't matter. You can go in and change whatever you want, but you actually opt yourself out of the network in the process.
And I think that's what frightens people early on, when they feel that scarcity idea, when you see Ripple and Ethereum and Bitcoin Cash and Litecoin and whatever else, it's easy initially to feel, well, how scarce is it when every Tom, Dick and Harry can start up a new coin tomorrow and even a new form of Bitcoin tomorrow. But the scarcity is in that actual blockchain, if you like, as opposed to all cryptocurrencies.
Exactly. It's in the network itself. So this is the one network that runs this set of rules, and it is the one network that that nothing can be changed. Whereas all these other networks that end up forking off, basically, or that go and create a copy of it, they're all run by someone. And this is what I always come back to when I kind of describe Bitcoin to people is the innovation wasn't blockchain. Blockchains existed for 20, 30, 40 years. Like timestamp databases are in no way interesting. Like, and there's no application outside of, its relevance in Bitcoin is like one piece of the recipe that where it really matters. Like blockchain is such a boring concept, but in the context of Bitcoin, alongside proof of work, alongside, the solving of the Byzantine generals problem, which is how do we reach consensus amongst parties who do not know each other? Like that is the first time that's the hardest mathematical problem. One of the hardest mathematical problems in history. It's how do you get convergence amongst people who don't know each other, who might have an advantage of screwing someone over. And like Bitcoin is like, almost call it like the prospering of the commons. It's the first time you work in your own self-interest, but benefit the entire network. So Bitcoin's 0 to 1 moment, if I'm going to quote Peter Thiel here, is it created a network that achieves autonomous consensus for the first time in history. And through doing that, it created, for the first time ever, digital scarcity, a network with a finite set of units that runs on that network. And that right there is the innovation. And my argument is that's the biggest innovation we've had since probably fire. Like, it's bigger than the wheel, it's bigger than the internet, it's bigger than electricity, it's bigger than all of that, because money is the fabric that binds us. And now we finally have something that actually maps directly to time and energy. That is profound to me, because that unlocks our ability now to cooperate, as opposed to beat each other over the head and take each other's stuff.
And so it's not the complexity of the technology that is what's so special about Bitcoin. It's that digital scarcity piece, and it's a finished product effectively. Is that right?
Yeah, 100%. Like, Bitcoin hasn't had any downtime. Like, in the early days when Satoshi and the guys were first messing around with it, there was some problems in how some of the nodes were running the software, and there was some weird things like that. But I think, Bitcoin's the only network that, I think to date it's 99.999% uptime or whatever it is. So it's like, it runs globally 24/7. No one runs the show, the way it changes and everything like that, or updates to the code. Like, and it's, I need to be careful here not to confuse people anymore, but the Bitcoin code just doesn't get updated willy-nilly. Like, proposals are put through, which then, are reviewed on a peer-reviewed basis by, everyone who's part of the Bitcoin developer network, basically, which is this open network. Anyone can be a developer around the world. And a change is only pushed through in Bitcoin when every single developer that looks at it, approves it. And then every node operator also needs to then run it. And then every miner then needs to put their hash power, which is billions of dollars of hash power behind that. So it's like this thing that you've got, like, I mean, it's hard enough to get 5 mates to catch up, and choose a time to, like, to coordinate 5 people to have dinner. Try and coordinate a network with hundreds of thousands and millions of users all around the world that is traded 24/7, that, moves trillions of dollars in value around. Like, try and get that to change. So this is where, like, I think a lot of people miss that, we've created a digital network that, like I said, reaches autonomous consensus and has digital scarcity as its cornerstone. And I still hear people say, "Oh, Bitcoin's boring. I've, found something else." It's like, wow, like, we just found the philosopher's stone, and, people are sort of walking right by it because it looks like a stone. It's so I find that really, it's a profound invention, and it's all of those things combined together that make Bitcoin special. Going and changing one of those, I always say, is almost like, I did a talk a couple of years ago where I kind of said, blockchain is a joke, the future's on Bitcoin. And it was at a blockchain conference that didn't make too many people happy, but whatever. I kind of said that a lot of the blockchain people, they see Bitcoin, they're like, "Oh, well, I like this part here, so I like this blockchain piece." And they kind of take that out of context, and they say, "All right, I'm going to apply blockchain to, like, tracking the provenance of lettuce." It's like, all right, man. And they go ahead and do this. But to me, I kind of look at that as, if Bitcoin is a cake and it's got all these ingredients, and you kind of take one ingredient out and then go and market it as a better cake, you're not selling a cake, you're selling scrambled eggs, like, it's a completely different thing. It doesn't matter. And the market Bitcoin is going for is the market for money, which is the biggest market on the planet, because everything's priced in money. So,
all right. So that's the new. We spent a bit of time in the new age tech world. Let's get people back to the old fiat world.
Yes.
How is money created?
Well, these days, I don't think anyone really knows. But what we assume is that some central banker or bureaucrat, or a group of them, decide that, hey, the economy is not doing so well. So the solution, of course, in the central banker's mind, is that we should either, they've got a couple of levers that they can pull. They can lower interest rates. They can, buy debt, or they can literally just increase the money supply. And these days, generally, the easiest thing to do is to increase the money supply, or to buy financial assets, which inadvertently increases the money supply anyway. And they think that solves the problem. It's kind of like almost like a junkie taking more drugs because it makes them feel better in the moment. And they're sort of kicking the can down the road of where the real problem is, which is economies and, the society only grows when the productive capacity of the individuals in society actually increases, not when you create just more money out of thin air. That's like, if we need to build a house, you need more workers. You don't need to just give people more rulers. It's a bit ridiculous. So these days, the way governments seem to approach money is by creating more rulers or creating more inches, which doesn't make any sense. So that's kind of where we are today, which I find really strange. And I think that has really significant consequences in the world, which is if you're an asset holder, money ends up naturally flowing into something that you can't print. And, you can't print houses, you can't print stocks. So we're getting all this asset inflation. And here we are, a lot of us think we're really brilliant stock market investors, when in reality, if you just map the money supply to the rise of stock prices, there's a beautiful correlation there. And really the game has become about buying anything other than money, so hold anything other than money.
The money print, I think, particularly people that aren't in finance world or don't read a lot of info regarding money supply will have this view that central banks print money and then they just give it to people, sort of like helicopter money, which has happened in small amounts of late through various fiscal programs, particularly through COVID. But by and large, the money gets printed, commercial banks buy bonds, then the Fed Reserve or the various other central banks buy those bonds off the commercial reserve, and the money just sits in almost a ledger account between the commercial banks and the various central banks, which just rips velocity of money completely out. So we see no inflation in wages or day-to-day living, but we see huge inflation in asset prices, which is what you're speaking about, which is a huge cause for the inequality we're seeing all around the world. There'll be MMTers or people that will say two things. Well, firstly, we need to create money not by central banks printing it, but by commercial banks loaning it into existence, getting the velocity of money up, which will then improve life for the worker. We'll get some wage price inflation and some CPI inflation as well, which can be a good or bad thing depending on how you view it. And it feels like more fiscal stimulus is coming down the pike, particularly in the States, and the rest of the world will follow. How do you view that sort of societal impact if this money creation was going into the pockets of workers and creating wage inflation as opposed to asset price inflation? Do you think the problem that Bitcoin is solving would be as great if that were the case and if that comes down the pike?
Look, I think that's almost like putting just lipstick on a pig, because at the end of the day, we're not. Anyone who sort of looks at systems from a holistic standpoint will sort of really understand this piece now, is that when you create any form of inflation, so I think the MMT is kind of a little bit on a better track, because instead of creating just pockets of asset price inflation, which really starts to tear at society, giving it to people is probably kind of like a step in the right direction, but it creates like any form of inflation, even when it comes down to like wage price inflation, everything that's going to then filter through the economy anyway, by then increasing the price of the everyday goods that we buy anyway. So it becomes this game of like almost like musical chairs, which is who can raise their prices quickly enough anyway to kind of meet the rising price of wages and all this sort of stuff. And like, I don't know, if you look at it on a holistic standpoint, it's not solving any problem. It's just perpetuating the same issue we've got, is that we're not increasing productive capacity. We're just starting to raise the prices of everything. And we kind of start to become, variations of Weimar Republic or Venezuela, which is, we've got more of this stuff called money, buying less of real goods and services. So to me, it doesn't solve anything. And again, it doesn't map to what money is supposed to represent, which is our labor. There's no point in having more money when it represents less of your labor. And it almost flies in the face of how technological progression. I don't know if have you heard of Jeff Booth and his book Price of Tomorrow? Yeah. So I'm doing a podcast with Jeff Booth over the next couple of weeks, and him and I just wrote a piece in this new publication called Bitcoin Times. And he talks about how deflation is the force of progression. it's perfectly normal to think that as we progress and as we create new things, as we get more productive, as we produce things better, their price naturally comes down. So it's really like it, these days we have these iPhones, which, now they've dematerialized, 100 different things, like, your camera, your calendar, your calculator, your all sorts of other things that you traditionally had to buy. Technology deflates stuff. And here we are, we've got these central banks and, these governments trying to counteract almost like a force of gravity, which is things naturally get cheaper, but they're creating more money, which is kind of artificially making some things more expensive and some things cheaper. And like, we've completely distorted the pricing mechanism for everything. So nobody knows what anything's valued at anymore. And I think MMTers and all that sort of stuff miss that point. So they're going to just move the problem from one place to another.
The value of the debt doesn't deflate though. I mean, that's the thing that's the puzzle that is such a challenge to solve, is that tech has just created such a huge amount of deflation around the world, as of demographics and debt as well. But the system just doesn't work with deflation because we've got such an enormous amount of debt in both the public and private system. And if the world is deflating, in real terms, that debt's increasing, and we've never seen this much debt before. So that seems to be just the arm wrestle that is so complicated as a unemployed ex-footballer to think, how does the world get out of this? Because it's quite a doozy when you look at it through that lens.
It's a big problem, man. It's a really, really, really big problem. And it's just one of those things. It's, at what point do we kick it cold turkey? Because at some point the junkie's going to die. And all we're doing is we're going to keep inflating. Like, so I'm not deluded enough to think that the governments any way, shape or form are going to stop inflating anything. So, they at some point there's going to be too much pressure. So I think UBI and MMT and all that sort of stuff is going to end up happening. But all that's going to do is, exacerbate the problem in a new way. So at some point, the wheels are going to fall off this thing. And that's like, so my biggest concern there is how do we find a way to protect wealth? A lot of people get it. They're buying assets, they're buying houses, they're buying real estate, they're buying stocks, they're buying shares, they're buying indexes, they're buying anything they can. But you've got this thing here, and this is sort of where Bitcoin comes into the picture, is it's, I believe, that the most undervalued, underappreciated, most misunderstood, new, call it asset class, call it, define it however you will, that will ultimately suck up a lot of that excess liquidity because it has to. And I'm not going to sit here and suggest I know how this whole debt bubble thing is going to eventuate. I'm probably more pessimistic than most because I just don't see a solution for it. Like, I think we've sort of, governments and society have almost signed a Faustian bargain with inflation, right? It's like, we've started on this path. The debt is so high now, you can't turn it around. Anybody who turns around and says, all right, we're going to allow, the natural deflation to sort of take hold, is going to get crucified, because then all of those debts, like, what are you going to do with them unless you just default on the whole thing and we have a global reset? So it's a really hard problem. I don't think one that has a solution. And I think this is where sort of Bitcoin comes in. It's almost this new financial network here, and we can kind of build from scratch here. And in the process, people have an opportunity to kind of buy almost like a stake in that network. It's almost, I almost kind of envision it as the old world, like England is, falling apart and the monarch is being a crazy bastard. And, it's the American forefathers gone to America and they found this new land and they're starting to develop, in Manhattan, and you can buy a slice of Manhattan for a couple of skins. And that's sort of where we are with Bitcoin. It's this new network, this new monetary sort of system that, you can buy a stake in it now, well before anybody realizes what this thing is valued at. And the beauty of where we are now in terms of the progression of the world is that anybody can buy a piece of this thing. It's directly, measured as a kind of money or an asset. So you can personally, I call it, you can get rich, you can get wealthy in the process of like supporting a revolution. So again, I don't want to sort of go too deep down the revolution rabbit hole, but I just find it really, really interesting in that sense. And then as an asset class, it provides the greatest upside, I think, anything the world has to offer today.
You've mentioned a couple of times that it's money. Is it money or is it gold?
I mean, gold is fundamentally money. So I think, this is just a better form of money. Now, again, it really comes back to what that definition is. I think maybe people kind of confuse currency with money, and they sort of envision currency as this medium of exchange thing. And because people aren't really using Bitcoin as a medium of exchange, they're like, oh, well, then it's not money. And what I kind of argue with that is money has the ability for you to use it in any of its three functions: store of value, medium of exchange, or unit of account. Now, me personally, I use it for all three. So, we have, contractors who work for us all around the world.
And they get paid in Bitcoin. Is that right?
Yeah. So like, because that's so much easier. Like for me to go and pay someone in like, Serbia or here or there, it's a nightmare. Like, so it's like, I can just send them some Bitcoin really quickly and it's easy. So it is superior in medium of exchange. Like you can send
anything. It's just expensive to transact though, isn't it?
Not entirely. I mean, it depends how much, so Bitcoin, the Bitcoin network is, has these validators, which are known as miners. And when you put a transaction into the Bitcoin network, so it sits on a mempool, these miners have to include it in the next block on the chain. Now you include your transaction with a fee, and now you can set that fee to whatever you want. I generally set the fee at like 2 or 3 Satoshis per byte. And what that effectively means is that it ends up costing me maybe 30 cents or 40 cents to send someone money anywhere in the world. So it doesn't really matter. And the beauty is I can send $1 or I can send $1 billion for 20 or 30 cents. It doesn't matter. Now, if I want to prioritize my transaction, I increase the fee and make sure that it gets included in the next block.
Okay.
And then I might pay $5, $10, $20,
So that's when you're buying it when you're buying it on an app, that's prioritized, hence why the transaction fees a lot more than the 20 or 30 cents. Is that right?
No, not exactly. So when you're buying it on an app, you're paying an exchange fee. That's different. So that's like kind of like the money changer fee. Like if you're swapping Aussie dollars for euro, for example, you pay a percentage fee. So that's different. That's to the exchange.
Yeah.
But on the Bitcoin network itself, every transaction that gets included in the blockchain also has a fee associated with it. So that fee is what people talk about when they say Bitcoin transactions are expensive.
Yeah.
Is that there's a limited amount of transactions that can fit inside the block.
Yeah.
And the way those transactions get prioritized is what fee anyone who wants to perform a Bitcoin send wants to apply to their transaction. So if I need to send money quickly, I just apply a larger fee in my wallet.
Gotcha.
And then the miners prioritize that. And the thing is, long term, that fee is going to continue to increase because you're talking about sending money anywhere in the world that is irreversible on this autonomous global settlement network. Of course, that's going to get expensive.
And so even once the 21 million Bitcoin have been mined in 2140 or whenever that happens, those fees are still going to be made by miners effectively. So those miners are going, they're going as long as Bitcoin is going. Yeah.
Exactly. And that's where, so a lot of people sort of freak out about the whole mining thing. Oh, what happens? How do we incentivize the network after the miners drop off? And this is, again, one of those things that when you think about the foresight of whoever Satoshi was when he created this thing, is he created like what's called an asymptomatic supply schedule. So a lot of Bitcoin was created in the beginning. So 50 Bitcoin every 10 minutes. And then every 4 years it halves. So then it was 25 Bitcoin every 10 minutes. 12.5 Bitcoin every 10 minutes. Now we're in the fourth epoch. So it's 6.25 Bitcoin every 10 minutes. And that gradually sort of halves until we reach that 21 million point. But throughout that time, the proportion of fees that the miners are earning increases from the transaction fees and decreases from mining fees. And it's this beautiful sort of transition across to earning revenue for validating the transactions on the network through transaction fees, not through block reward fees. And that's a really important part to understand, because what that means then is you've got this sort of sustainable base network And this is where we start to build things on top. So like, I don't know if you've heard of Lightning Network, but that's like a second layer piece that sits on top of Bitcoin. And it uses kind of like a bar tab. So, when you go to a bar, you give them a credit card, they give you a card, and you can just sort of buy all night. And then at the end of the night, you settle your bill.
Okay.
Bitcoin does the same thing with Lightning, is that let's say two people want to transact, they both open up a channel. So they do one Bitcoin transaction, then they can transact between each other millions of times. And then they settle the net balance on the network later. So if you kind of think about Bitcoin in that sense, you can actually abstract throughput on a second layer, and you have the ultimate medium of exchange. Like literally with Lightning, I can send you one Satoshi, which is 0.0001 of a cent, instantly right now. Like I can do it over this phone call, and you've got it. And it's like instant, it's fixed, it's secure, it's free, because Lightning Network sort of, has its own incentive mechanism that sits over the top. So it's just wild to think that somehow fiat money is superior to Bitcoin, when Bitcoin sort of scores a perfect score, 10 out of 10 on every function of money.
I feel like Satoshi's missed out on getting a few groupies and really living it up. Do you think he should go public? And
hell no.
Do you think, are there people that actually know who he is? Do you think, like, there's obviously people in this world who've been there from almost the start. Do you think they actually know who it or which group of people it is? Or do you think it genuinely is an anonymous person or people that no one knows?
Look, I think the smartest and greatest thing that Satoshi ever did was disappear. I think, to answer your question, if I had to guess, the closest guess I would say is Hal Finney. And now he's frozen because he had ALS, which was a degenerative neuro. I think it's both a physical and I think it's actually more physical degeneration. Anyway, so he was basically on his deathbed, coming into 2011, 2012. So he was the first person to run Bitcoin alongside Satoshi.
Okay.
Now the question is, was he actually Satoshi? Was he sending himself that message and popularizing that? And then he kind of ended up, because he got to the point where like he couldn't breathe or anything anymore. So they put him on ice, with the intention to maybe one day revive him in the future when there's a cure for ALS.
God.
So if I had to take a guess, it's probably Hal Finney, or maybe a mixture of Hal Finney and a couple other guys. But that's most likely, if we had to take it. Otherwise, it's some group that definitely was inspired by Hal Finney, by Nick Szabo, by Wei Dai, by a couple of those people. Like the dream of Bitcoin existed for decades beforehand. It was just no one cracked it until whoever Satoshi was.
It's amazing. So we've covered a bit of ground, I reckon, already. If you're a share investor watching this, what are the main things people should explore or get comfortable with if they're sort of sitting on the fence thinking about maybe taking the plunge?
For sure. So I think, first of all, and we've kind of gone, like you said, on heaps of deep sort of tangents here, is don't look at Bitcoin through the lens of a company. You're not going to find, earnings and, all of that sort of stuff in this. What you want to look at it is the money we're using in the world today, is it functioning properly or is it broken? And I think, the more you look at it, the more you understand how money is supposed to function, the more you look at the fiat currency model that we live in, that paradigm that we live in, the more you realize it's fundamentally broken. And, we end up with a new type of fiat currency every, 80 years roughly. So if you can sort of get across that, then you realize that, all right, holding assets in general is a better place for my money. The last thing you want, like cash is trash, basically. So then you start to say, all right, where do I want to hold my cash? Well, stocks and bonds and all that sort of stuff. That's great. But, all of those things are already inflated so high. Like it's very hard to find value in any of those spaces now. So all we're doing is we're sort of all chasing and, we're kind of like blindly chasing the same thing everybody else is chasing. So you then want to ask yourself is like, where is there asymmetry in the world? Like where is something, where's the next, I call it the internet opportunity. I did a webinar with the university students the other week, and I called the name of that webinar was This Generation's Internet Opportunity. And you kind of you look around and you don't really find anything. Real estate is valued, ridiculous, multiples. Shares are valued at ridiculous multiples. Everything is, but you kind of come along to this thing called Bitcoin and you say, all right, money's broken. This thing has these particular attributes, which again, you can go and research further and kind of validate and build the trust for yourself that, hey, this thing is a new form of money. It's not going after, chewing up Amazon or Apple's marketplace. It's actually going after the monopoly that central banks have around the world. Does it provide a better, is it a better money technology? And I would argue that 100%, like it is the best money technology that we've had. And then you can ask yourself, well, if it's fixed supply and if it's a better money technology, what is likely to happen over time? Well, likely more and more people are going to want to hold this, whether that is people at the bottom of the rung, whether it's people like in Venezuela and Ecuador. There's a place called Bitcoin Beach now, which, they do everything in Bitcoin there. Through to the middle class, which is, mums and dads who they're not stock market people. They don't know where to put their money. And, like I convinced my mum a little while ago to buy a bunch of Bitcoin. She's very happy now. And like, it's, that they want to put their savings somewhere. So you got them. And then you've also got the large end of town. So your Paul Tudor Joneses, your Stanley Druckenmillers, what's his name? Michael Saylor. He just bought another 50 million. So that's $475 million off their balance sheet. And they've put that into Bitcoin as a treasury asset, not as a bet, not as an investment, but instead of holding US dollars, they're holding Bitcoin.
I think that's one of the important things is there'll be some people that aren't going to be prepared to become Bitcoin maximalists, after a month's worth of reading, but they understand the flow of money and they understand what causes companies or assets to get re-rated. And when you look at what's already happened to Bitcoin, probably this year, those names that you mentioned, but you still don't have any pension funds holding it. Some of the world's best hedge funds are now in. You still don't have any central banks around the world holding it as a reserve asset. We know they hold a lot of different countries' bonds and they hold gold and they in various currencies. But in terms of, PayPal choosing to use it and store it as a vehicle for payment on their system and network, which is astronomically huge. There's still so many different milestones that are pretty easy to piece together in the next 12 to 18 months. From pension funds buying, the first central bank, should they choose to use part of their treasuries and part of this as an asset class. You can see where the re-rating can come, even if you're not of the view that this is going to transform our financial system, don't you think?
Absolutely. So and what you're defining there is actually how early we really are with Bitcoin. Like I always get asked the question is like, oh, it's 20 grand now, am I too late? And I'm like, nah, man, you're right at the point where we're moving away from like Bitcoin has now proven itself. Like the best hedge fund managers around the world, like public companies are starting to put it on their balance sheet. And what I kind of argue now is, 2, 3, 4 years ago, you could have argued that, hey, it was a risk to buy some Bitcoin. Now it's actually a risk not to buy any Bitcoin. Like if this thing really starts to take off, which it's showing, these signs, and you've got this finite supply asset with more and more capital coming towards it from every strata in society, from the poorest to the middle class to the richest. They all want a piece of this. It's going to put upward pressure on something that has a diminishing rate of, new issuance. It's like this fixed supply. You're going to be asked, if you're a CFO, if you're a financial controller, if you're a broker, if you're anyone in the financial industry, and you haven't taken Bitcoin seriously, in 5 years' time, your job's going to be in question, and people are going to be asking you, what the hell were you thinking 5 years ago, not allocating something to this asset class? So now I think the risk is greater not to take this seriously, not to have some skin in the game. Like I love the idea of skin in the game. Like Nassim Taleb obviously popularized that notion, is that having some skin in the game with the Bitcoin thing is really important. And that's really like why I built Amber, is like I wanted people to get some skin in the game, even if it's just $10 a week. Who cares? Do something. Like I always look back at my history is like I went to university. I got straight A's across everything. I think I was in the 1 percentile for my HSC, and I was doing physics, math, and all that stuff. I got a bunch of scholarships for uni. I then took my scholarship money and I traded the market, and I was trading derivatives back in 2007, back when like the early days of Westpac broking was still out, like with the big, white screens, the computer screens, the big chunky things.
Yeah.
And I turned like $5,000 into 60. And then in the space of 6 months after that, like I got my first, major lesson in bear markets, and I turned my 60 into minus $250,000 in the space of 12 months. So that was sort of like between 2007 and 2008. And I mean, then that's when I sort of went down the rabbit hole of understanding how money's created and QE and all this sort of stuff. And then I made a bunch of money out of gold and silver in 2011, 2012. I rode that from like the bottom all the way through to the top. And it's funny, like all my life, I've sort of been involved in markets, and I've made money, lost money, made money, lost money. But if I just did one thing, which is if I just bought Amazon $10 a week from the beginning and stopped like trying to be a genius, trying to beat the market, I would be so much wealthier right now. It's not even funny. And that's where sort of Bitcoin is right now. Bitcoin is Amazon in 1996 or, maybe 1994 or whatever, like when it first started. Like we are so early, and, get some skin in the game now. That's what, I was trying to be a genius and I wiped myself out. And I think the amount of, I'm probably net after 12 or 13 years of messing around on the market, like I'm probably square. After having lost $250,000 to begin with and made a bunch of money, lost a bunch of money. So it's just, when I think about all I had to do was just dollar cost average, I'd be so much better. And that's what you want to find. You want to find asymmetry, and then you want to sort of accumulate over time. And I think Bitcoin provides the best opportunity for that today.
It's a great place to finish. Where can people find more of your stuff if you're writing, and what's your Twitter handle?
Sweet. So my Twitter handle is just my name, Alex Svetski. So it's Aleks. So it's spelled a bit funny than Svetski, Svetski. My Medium, I implore people. So my Twitter is a little bit abrasive, so just be warned. I'm always at war with someone over there, but that's kind of the persona.
That's the medium for it, isn't it?
Exactly. It is the medium for it. So if you want to find the more measured and thoughtful Alex, go on Medium. So it's just svetsky.medium.com. And then there's a series of blogs there where I kind of take people through all sorts of like Bitcoin through an economic lens, Bitcoin through a philosophical lens, Bitcoin through a industrial lens, Bitcoin through a how society changes lens. So all of that sort of stuff I think is really important. I would, the team also wanted to do a little special for yourself and all the listeners. So if you download Amber and you buy some Bitcoin on there, I think it was $50 or whatever. So if you kick off, we'll chuck in an extra $10 if you put in the code Talk Your Book.
There you go. Thank you.
So we'll run it for December, so that way people can sort of download it and get that free $10. And yeah, like I literally implore everyone to get some skin in the game. Start reading, start understanding this. You're going to get distracted by what we in the industry call shitcoins. And again, like I look at Bitcoin very separately to crypto. I look at crypto as just private fiat. So you've got government fiat, and then you've got private fiat. And private fiat is just people who think that they know better. They're like, whether it's Ethereum, whether it's any of these other things, they're like, government bad. They're printing their own money. We're better. We print our own money. So it's like they haven't solved anything. They're just doing the same thing. They just think they're smarter. Whereas Bitcoin sort of stands like head and shoulders above everything, which is, here's this network. It's above reproach. Nobody can change it. It provides all these guarantees of, fixed supply, of 10-minute blocks, of this and that. So we can now all, have a piece of this network. And yeah, I really, if anyone wants to reach out to me, hit me up. Like if they want resources, I'm always open. I'm kind of, there's a greater mission here for me. And yeah, I really appreciate you having me on and sort of being able to spread that message. Awesome, Alex. Really appreciate it. I've loved it. Thanks very much. Thanks, Chris. Take care, man. Cheers, mate. This episode of Talk Your Book was proudly brought to you by Honan, who go beyond a transactional insurance broker to deliver better outcomes for their clients. If you're enjoying Talk Your Book, make sure you subscribe to Chris Judd Invest.